So, good morning, everyone. I hope you're not too depressed about the charts that and the numbers at the moment because the world is in the red. But if you follow this Monday market analysis every week, that should not come as a big surprise. So let's see what the charts and the world has in store for us today and the coming week. Quickly starting with the headlines and the overview as usual. Europe stock markets pretty much in the red. Asia was also completely down, with Hong Kong even 3.4%. US pre-market red everywhere you look. Nasdaq 3% down pre-market, S&P 2.44, Dow Jones almost 2. So that's pretty red. Oil and natural gas are all in the red. Gold, silver, copper, all the metals are in the red. And the only thing that's in the green is the bond yields. And that's a pretty significant sign at the walls. Like if all the asset classes are down, crypto, stocks, metals, commodities, everything is red except for the bond yields, then it's a very clear signal of the macroeconomical state. Quickly scanning the headlines. Global markets are tanking, yep, that's obvious. Bitcoin falling below 25k, wiping off a lot of total market cap. We will see that in the chart in a bit. For the rest, Fed week is upon us, so that will provide some interesting events. Talking about events, let's look what's in the planning. I filtered this on high impacts only because there are a lot of smaller events this week. Producer price inflation numbers coming tomorrow. Don't think that will be the biggest market mover, not after the inflation figures of last week, so this won't be any surprise for the market. Fed interest rate decision expected to go 50 basis points up to 1.5%. There are some speculations of it will being raised to 1.75 to fight inflation. I have my doubts about it, but the interesting part will be what he will say in the press conference after, with the FOMC meetings and the Fed press conference on Wednesday evening, European time. That's what the market will be moved by this week. For the rest, Thursday, some housing starts and building permits. There was a big drop in number of new mortgages in the US. I can't really find the figure at the moment, but there was quite a significant drop there. So that might be the popping of the current housing and a real estate bubble also coming up. Those might be the early warning signs, and if so, that should be starting to get visible. Probably not in figures of May, but in June, July, you probably see some changes in the housing starts and building permits. So, macroeconomical speaking, Wednesday evening is D-Day, and we'll have to see if it's doomsday or a more positive way. So let's switch to the charts. There we go. Let's start with the DXY. It has been on a nice pullback there. We're actually going into hitting that all-time high soon. This might as well be turning out to be a nice cup and handle pattern there. And if you watch the measured move, you will come pretty close to that 1.272, 1.414 Fibonacci extension level around 108, 109 percent there, or US dollars. So I think that will be the most likely scenario. We do have some resistance here at 105-ish, 105.5 to 106 level, where we might stall a bit, but these targets are not unrealistic if you look at the current scenario. If you look at the USD Euro, or let's do the other way around, that's easier. You see there was a quite steep drop there, and if we go to a weekly scale, we had a very nice reaction of that bullish harmonic pattern, but it completely stalled at the descending trend line. So that's a very clear signal that the trend is quite bearish, and where we are now is a pretty significant pivot level. It would not surprise me if we will flip the $1 mark in the coming weeks to month. So if you're into forex trading, you definitely have some alerts on these previous low from January 17, December 16. If we break that, we will probably drop to the $1 pretty fast. $1 is a support level. After that, 96, but if we break that, it will probably dump straight to 88 cents, 90 cents. So good thing to watch out for if you're into forex. Quickly switching back to DXY. So I don't think there's any bearish narrative at the moment yet. We must see what happens here. We might get a cup and handle, but obviously also a double top scenario where we go down much further is an option. So coming days will probably be the more telling days for what the US dollar will do. If we quickly take our fibs and presume we will hit pretty much the same levels as before, either making that double top reversal or going into a cup and handle, then a logical breaking point for the cup and handle will probably be that 103.5 level, the previous top of this range. If we break below that, then there's a higher chance of making a double top reversal. But considering the whole macroeconomics, I have a feeling that this pattern will be more likely the cup and handle. Of course, we don't trade based on feelings, but it's good to anticipate potential patterns forming so we can already plan our trades for that. Moving up in the charts, US bond yields. This is the 2-year bond yield. It just keeps going parabolic after a short accumulation phase. This is on the weekly chart, by the way, and you see we broke out of that 3% magic number here. That was the high of November 18, and we haven't seen levels like this since December 07. So very significant break of resistance there, and we haven't even have the follow through action starting right now. So as long as bonds are the only thing that's going up, then that's pretty much bad news for the market, and we will look at the stock market charts. We're at a very pivotal moment where it's about to drop through the floor. So bond yields seems to be everyone's go-to at the moment. Quickly looking, we had a small drop in correlation between the Nasdaq and Bitcoin, but correlation is back on the rise. Hopefully they are falling together. Gold going sideways at the moment. It's in an expanding accumulation range there. Considering the current situation, I don't. This one we can drop out. In my opinion, two options: we backtest these levels before bouncing up, or we break out of this wedge, probably hit that 1907 level before breaking up. Might take a bit of time. Gold is like a huge cargo ship, takes some time to turn around and to navigate, but long term 1980 2k is more than reasonable levels, and still expecting on very long term, if you're talking about months to years, we should go to 26, 25, 2600. But it takes patience, a lot of patience there with gold. Still looking pretty good long term. Bitcoin, price we will look in the other chart, but it's pretty obvious that very significant things are happening at the moment. But what is the most interesting, and I tweeted about it last week, is that we are finally getting some hash ribbon. Just move things down a bit. We see here hash ribbon capitulation. That means that the miners are pretty much stopped mining because with the current prices it's not worth the effort. Recovery is one of the biggest reliable signals in Bitcoin. If you just look, this previous mining capitulation it also was almost at the same time last year in June, and we got that recovery buy signal. We did 60% to the upside. Blue is recovery, but blue is the buy signal, green is recovery, so we are waiting for that buy signal, not just recovery. So that's 60%. If we go back in time, the capitulation of November, December 20, where we had an awesome bull run there of 340, 335% after the buy signal. The July 20 buy signal also pretty much depends where you end it, but you could pull it all the way up here. Most important thing is to realize that capitulation does not mean we are hitting the bottom. Like here we had our capitulation signal around this price, and we still went down another 27% before getting the buy signal. If you go back in time, a lot of times after getting the capitulation of the hash ribbon, there is still more downside. Not in this case, but in this case there was also Still more downside potential, sideways action. Here it wasn't, but it happens quite often that you still have a significant leg down. Here is another good example. So I know there's quite a bit of hype already about the hash ribbon on crypto Twitter, but keep in mind, like 1/3 of the time you still get a 20% drop after the initial capitulation. This one. Just go back to current dates. TradingView managed to overlap those icons. Very lovely. So when did we get that capitulation? We got it on this candle here, and oh, we already managed to drop 20% since that signal. So be patient, wait for that blue buy signal. This is just the free TradingView indicator hash ribbons. Everyone can add it. Keep in mind that you have to wait for the buy signal. Bitcoin dominance keeps rising, altcoins are completely destroyed. We finally had that complete wipe out of all the scam coins and all the trash. That was, in my opinion, highly needed. So much alt trash out there. It's good that they're all getting burnt and obliterated. It's very nice to watch which altcoins survive this bear dump, this bear market, and start making plans on what alts to buy into once we reach a bit of a bottom, and to start scaling in some alts. I'll be looking for my next basket of altcoins in the coming few weeks. Bitfinex, well positions, they're still scaling into their longs. We see some shorts were rising but also getting closed again, because obviously 25k was quite significant. Take profit for shorts, and it's also the next level to scale in for the whales. We saw at 30k, we saw this peak. Now we've dropped $5,000. It's expected to have another rise in the long-term long positions there. If we reach 20k, you will probably see another leg up in the number of longs. So whales are accumulating and slowly scaling into the bear market. They have time, they have patience, they have money. They will just buy every $5,000 drop, even if it goes to much lower levels. They will just keep buying, and they know in a few years they'll be in massive profits. Then I think one of the most shocking bearish charts that we currently have, total market cap of crypto, all the altcoins and all market cap combined, and we see that over the last few days there was an amazing, pretty crazy drop, like $290 billion on the peak. More than $300 billion just was wiped out, and we broke that magic $1 trillion. So market cap is at the lowest level since February 21. So not a good news. And the next support level, now we broke that 1 trillion. Next support level is that 800 billion, and so that's another 17 to 18% drop in market cap there. So probably we will get a bit of a pivot here, a bit of a recovery rally, but as we will see in the next charts with the stock markets, we might as well instantly go to that $800. Switching to stock markets, we had a nice bit of a rally, but if you look at the major indexes, we have this low from 20 May. Here the low was a bit further back. And on the S&P we have our low here. And what you see is that the S&P is exactly at that low point at pre-market, and we also have the Nasdaq exactly at that low point. So the bears are dancing so violently that they're about to fall through the floor, and if that happens, there's a lot of downside potential. If we look at the Nasdaq, which is already almost 3% down in the pre-market. We switch to the weekly chart. Next target, yeah, pretty clear. It's that 10,500 618 retrace. So from the current level, that would be another 9-10% drop. And there's not really any major peaks you can use as support. There's this, obviously that 11k level is a psychological resistance, so that might stall the drop a bit. I don't see any. It might wick to that 10.5 and then recover back to the 11,000 on the Nasdaq there. But on the daily, it's just waiting to see if we fall through this floor. Wouldn't surprise me if we go sideways a bit until the Fed meeting. The Fed meeting on Wednesday evening. So red day incoming. Maybe we hold this previous low for a few days before probably continuing more downwards. Well, definitely bear market, and I think the realistically we're already in a recession, but on paper, following all the rules of the men in black ties, it's not a recession yet, but it probably will be. It's like we already had a pandemic for quite a couple of months before they officially declared it a pandemic. It's just the official name tag is always a bit behind the curve. So volatility, big gap up there, and it's reaching pretty much going towards the higher end of this structure there. If this volatility breaks out to the upside, it will be a huge bloodbath, even more than now. So switching to Bitcoin, like this zone we have been floating in and out of, it finally broke down. It had testing where it tested this low here and some other low pivot points here. So we finally had that break, hook back, testing previous support levels before not even reaching the zone itself, before continuing down. So predictable trade, working out pretty nicely at the moment. Like I've been saying for a few weeks, I'm not going to do any big trades until we get a breakout with confirmation. Well, we finally got it, and I took a 10x leverage trade on that. We finally got it, and pretty good trade finally, after all this time just messing around in around that zone with fake outs. So nice bull trap here, second bull trap dump. We're close to some major gain lines on this chart. That would bring us to pretty much 23k probably by the time it will get there. So 23k, then 20k is probably a likely target if we continue down. Don't be surprised if we get a bit of a relief rally in today, tomorrow, and Wednesday. We continue down there. If we switch to a trading chart, you probably see pretty much the same as the stock markets. That low, only crypto, Bitcoin already broke through the floor. So with pretty decent volume also, so it doesn't look like a fake out that will bounce up pretty soon. For our charts, yeah, pretty much looks the same. Market hyper calling these shorts pretty nicely. We do have the double yellow X's, the dump warnings called very nicely. Did we have one on the daily? Not yet, no, not on the daily yet, but it might be close. 12 hour, also not yet. So I think the 4 hour is the highest time frame where we had those dump warnings, double dump warning there with the yellow X's, and we see money flow is down quite a bit here. If you look at through MFI, every time we get a little glitchy above the zero line, it pretty much starts to dump again. So that here also a little glitch above the zero, continue to dump, and having a solid wave to the upside, it's quite a bit ago. Scaling down the 1 hour, bit of a resting candle here, bullish conditions, that all the bullish signals massively underperform. The best you get at the moment from a very strong bullish signal is a few candles sideways. So always be on guard on that. In sideways periods like we were in that zone, then it's very good usage of those signals. But in a strong downtrend, the best you get from bullish signals is a few candles, 1 or 2, maybe 3 candles sideways like here. 1 hour, new dump warning here. Stalling, resting for a few candles, but I think depending on the stock market open, might get some more downward action, maybe some sideways recovery until Wednesday. Already closed half of my short position, securing those profits, moving stop loss to break even, and I'll just let this part run. Quickly switching to the United States oil fund. I've been trading a lot. We had it 8.9 at the top, and we have it slowed down a bit because of China announcing new lockdowns in Shenzhen and I think from other places, and though that's more like the scarcity in oil is still there, but the demand has just a dip. But if you look what it's doing, we had the previous peak from 7 March. We traded this several waves up and down within this structure. Then we traded this breakout from I think 85-ish to 90-ish when we exited on that 8-9 here. Like 1, 2, 3, 4. I didn't expect this 9 to be invalidated by breaking below that 4 candles back. So nice trade there, but we do see that this yellow line has been acting as the previous high, is acting as support here, and will probably act as support once again. Long term, I really don't see this going down significantly, so I'm looking for the re-entry in this market. We do have some downside here today, because obviously those lockdowns and the stock market. But yeah, with stock markets going down 3% and this only at the moment 0.9% down, 9.5. It's clear to see that this is outperforming the market. Somewhere around $88 would be a very nice entry. So I'm patiently waiting for those price levels and some reversal signs on the lower time frames. So I think that's all I wanted to cover for today. Let's see how the stock markets develop, if they manage to hold that previous lows and make a bit of a pivot. Would be interesting to see what happens there with the volatility. Bitcoin, we already saw the prediction from that. Considering the Fed and the market, won't surprise me if we have 1-2 days sideways accumulation before continuing down. So keep that in mind. Alright, that was it for today. Stay safe out there, trade safely, respect your stop loss, and I'll see you all next week, Monday. Or of course in the VIP channels if you're part of that. Take care and bye bye.